So understanding the types of organizations that qualify for charitable status is important before you make a contribution. You want to make sure that the organization you're giving your money to actually gives you the benefit that you're looking for, which is most likely a charitable deduction. So the Internal Revenue Code defines the types of organizations that qualify for charitable status, and they fall into one of these 5 buckets. The majority of giving goes to this second bucket, but giving happens across the board. What's a common test question, however, is this. If you give money to a state, is it tax deductible? And the answer is yes. Of course, taxes that you owe to the state are not tax deductible, but if you make a gift to your state, it's tax deductible. So charities that would generally qualify under these definitions include churches, parks, colleges and universities, big organizations that you're used to hearing about, United Way, Salvation Army, etc. Charities that would generally not qualify would be anything that's a for-profit organization, a political group, a labor union, etc. So you can further separate out charitable organizations by whether or not they are public or private. And as you'll recall from a previous slide, we care about this because recall from this chart that the type of organization, if it's a public charity versus a private charity, will dictate how much of your contribution can be deducted as a percentage of your adjusted gross income. This is where it gets really pretty tricky. So you might be thinking, I'm not going to give away that much money, but occasionally you'll have clients that'll want to give away a ton of money, like in a year that they sell their business and they've got all this income that they're recognizing. They might want to make a giant charitable contribution, but they need to know that that contribution is going to be limited. And the limit, it could be 20%, 30%, or 60%, and it depends on the classification of the organization that they're giving to this contribution to. And it also depends on what they're donating. So let's go into a little bit more detail on this giving limit. So we talked about your adjusted gross income is used to determine what is the most you are allowed to contribute and deduct in any one year. And part of this relies on what type of organization are you giving money to? Well, here's the easy one. For public charity giving, your giving limit is 60% of your adjusted gross income. So if you, let's change my pen. If you make $100,000 in a year in adjusted gross income, your giving limit, which is the maximum amount that you can give and deduct. If you give more than this, you carry it over to the next year, 60% or $60,000. So you would remove $60,000 worth of taxable income at most in any one year if you give to a public charity. So public charities aren't the only organizations that provide you with this 60% of AGI limit. Private operating foundations do as well. And a private operating foundation might be like the Madison Children's Museum. And they meet the definition of a private operating foundation because the whole reason they exist is to support the Madison Children's Museum. They are not looking to provide support to other charities. That's what non-operating private foundations do. Non-operating foundations don't run their own charity. There's some strict rules about making sure that you distribute the donations and the income from those donations on a fairly short turnaround. In fact, I've included in the notes off to the side here some of the requirements for a private non-operating foundation in terms of getting that pass-through status, because that pass-through status allows for a 60% of donors' AGI contribution limit as well. So you've got 3 buckets of 60% gift limits. But then you've got this one little area that can be problematic, and that's a non-operating private foundation that doesn't distribute enough of its income or donations to be able to qualify for that high limit. And the truth is, maybe that organization does not care. Maybe they don't care. They're like, too bad, so sad. We want to accumulate our donations and our income because we're not worried about that limit. Anyhow, it's these 3 organizations qualify for the 60%.